Hello and welcome back to Moneycontrol live stream. You're watching Markets with Santo and CJ. So markets all set to end the day on a positive note. CJ, well, go ahead and say that I told you so.
Well, Santo, I'm a very modest and humble
of course,
person
I know
in
that.
life, so
I
don't
fully
want
agree
to,
to that. Yeah.
I don't want to rub your nose in it, but yes, it has played out to the script. I mentioned in the morning that I will not rule out a possibility of a short covering late in the latter half of the session, and now, I mean, look at the Nifty and Sensex; they are higher by what 1.6% each. Mid-cap index are doing even better, and you know the crucial part here is that the VIX index or the fear gauge or the India VIX index has fallen by more than what 5% right now, and that basically is a clear-cut indication that people with short positions in the market have been squaring it off just ahead of the expiry.
Probably they're gaining courage at the wrong time. But anyway, CJ, have you heard of that saying called "sell in May and go away"?
Something like that, yes, I have.
And which month is coming up?
May.
Of course, you get the point.
Oh,
so
Santo.
all this talk about this recovery and all things is just going to fizzle out in a couple of days.
Sell in May and go away must be in fashion when you used to have a probably more darker hair, but it does not matter anymore. I don't think with the sort of liquidity that we have in this world, people are not going away anywhere from this market.
Well, see, the bigger concerns such as interest rate, inflation, I've been repeating that ad nauseum for the last many days, but those, as long as they as the overhang is there, you'll continue to see gains being limited. No runaway gains for sure, CJ.
Yeah, probably the upside is limited, but what we are seeing is that downside is also not there, and investors can take heart from that.
Don't forget, you have the Fed rate hike also coming.
Possibly. That said, I think it's time to look at a lot of the action that is happening in specific stocks, and there's a lot to talk about today, right?
Definitely, and CJ, go ahead.
Yeah, starting off with Bajaj Auto. Well, in the morning I told you how Bajaj Auto is going to open higher, and it did. We did see about a 1.5% move on the stock, given the surprisingly upbeat earnings that the company came out with. But then management, the conference call with analysts happened, and the management commentary there was a bit disheartening. They have indicated that margins will continue to remain lower, as well as they are going to lose market share in Q1, which came as a very big surprise, given that you would expect at least to hold the ground that they currently have. And that led to a sharp decline in the stock. It was down about 2.5% at one point in the day. So yeah, things just a roller coaster ride for Bajaj Auto, and the sentiment has, and this is very typical of this market. Sentiment is changing within hours at this point of time.
Well, CJ, it's my turn to tell you that I told you so. This
yeah,
morning
have
we
your
were
day
debating,
in the sun.
And clearly, as long as the margin pressure is sustained, it's very hard for companies to be able to command that kind of valuations. And also, CJ, but I see that you're following one of the market policies, which is that when facts change, you must change your opinions as well. That's a good thing.
Never be blinded by your biases. Never.
ACC is the other stock in focus. The stock was up close to about 1% today, on a day when most cement stocks were under pressure. Now it's been in the midst of news of Holcim wanting to sell its India operations and exit. In terms of valuations, according to most analysts, ACC is trailing is quoting at a discount compared to market leader Ultratech. And one of the reasons for that is, according to Moneycontrol Pro analyst Sachin Pal, is that the company has not really been expanding its capacity over the last many years.
Right.
And because of that, it's also been losing market shares. But probably with the arrival of a new owner, this might well change, and you could see an uptick in the fortunes of the company.
Yeah, I mean, I think ACC's strength is remarkable in this market, but yeah, I mean, the play here is very straightforward. You have to wait till the announcement comes that a new buyer is going to emerge, because the seller has intended his intent very clearly, and when the buyer does come, it is going to result in an open offer. So this is a brilliant trading opportunity for for investors who are looking from a short-term point of view. In the long run, yeah, there are still, in the long run we are all dead, but in the long run for ACC there are still question marks. Capacity expansion is not happening. Volumes are not expanding at the pace that probably some of its bigger peers or even some of its smaller peers are also doing. So there are concerns on a fundamental level for ACC, but they may get ignored, as I said, because of the possibility of an open offer.
Yeah, and the fact that at this point valuations also seem to be a bit supportive. Ultratech is quoting at an enterprise value to operating profit ratio of about close to 15 times, whereas for ACC it's just about around 10 times.
Possibly. Next up, Godrej Agrovet. So Godrej Agrovet was among the buzzing stocks in trade. The stock was higher by about 7%, and the reason is that the surprise move by Indonesia, again flip-flopping on the entire export ban fiasco. Now Indonesia has come out and said that crude palm oil will be included in its ban list. That came into effect from today, and that had lit a fire in the crude palm oil market yesterday. CPO market was up about 10%, and Godrej Agrovet, being an edible oil producer, being in the crude palm oil production business, is a direct beneficiary of that. And it is possible at this point of time the company earns about 15 to 20% of its revenues from the crude palm oil business. But with such strong pricing and expectation that international crude palm oil prices will go through the roof, it will not be surprising to see this part of the business account for a larger share of sales going ahead.
Next stock, IRCTC. The stock has been struggling for direction for quite some time now. It had peaked out in October. Again, once in a while you see the occasional jump in the stock. However, once again the stock has been under pressure, and there's a reason for it. So if you look at the at the stock lending and borrowing window, short positions have been building up there steadily. At present, across all maturities put together, there's close to 2.3 million shares outstanding. This apart, theme stories have fallen out of favor with the market, which is also the reason the stock has been struggling. But the build up of short positions, I feel is a little interesting there. Not to mention that there's been consistent chatter about the government coming out with an OFS, which also could put the price under pressure in the short term.
But Santo, yeah, probably the OFS right now is the biggest overhang on the stock. Everybody is waiting when the announcement will come, and therefore you will be able to buy the stock in premium at a discount. And I think a lot of investors are going to lap up that opportunity, especially institutional investors, because IRCTC has been one of the stories of the past 2 years. It's an internet platform. It's been valued almost on par with other internet platform companies. And unlike some of the other internet platform companies, are actually profit making. Plus, the company has tailwinds from the reopening of the economy. We are going to have probably one of the greatest vacation season that we have seen in the past 2 years, come June, May and June. So overall, from a fundamental point of view, I don't see that many risks emerging for IRCTC as probably the current stock price is suggesting.
Quick point: it's profitable, yes, but how much valuation would you pay for it? Next stock.
Anyway, next stock is an interesting one because this is something that has not been in the limelight for a very long time, and probably a few years ago it was down in the dumps. But MEP Infra is emerging as a turnaround story in this market, largely because over the past 2 years its main business of toll collection was suffering due to lockdowns and statewide lockdowns, and that was affecting road traffic, as we all know. Now with the reopening happening and road traffic now coming back to probably pre-COVID levels, MEP Infra is direct beneficiary of improvement in toll collection. That said, the promoters recently have gone on and subscribed to the warrants of the company, as well as taken some infused some capital through preferential issue of shares, that too at a price of around 25 rupees per share, which was much higher than what the technical flow price should have been for the preferential issue, which basically indicates what there is a lot of confidence from the promoters that the business is going to do well in the coming 2 to 3 years, and possibly the stock could be a multi-bagger going ahead.
Or the promoter wants the market to know that how confident it is on the
prospects.
But
either way, he is putting in money, so there is no better sign of putting your mouth where your heart is. And the other thing is that there is some market buzz going around that possibly Neostar, which is owned by Adar Poonawalla company. Adar Poonawalla, who famously bought Magma FinCorp, and that stock has almost become a 10-bagger in the past few months. They have been accumulating the stock in the open market, and if that is true, then that is another great vote of confidence in the turnaround story of MEP Infra.
If that is true, we'll see about
that. But this is one stock to watch out for.
Escorts, again some renewed interest in the stock. It had crashed quite a bit a couple of weeks back, immediately after ending of the open offer
Yeah.
process and the shares being returned, rejected shares being returned to the shareholders. But over the last few days, again the stock has been slowly inching up. Now, outlook on the tractor segment is more positive when you look at the auto sector, and that is one reason that could be driving the interest. But notable point here is that if you look at the SLB window, that is the stock lending and borrowing mechanism window, it is among the stock where there is huge build-up of short positions, close to about 7 lakh shares, which is not a huge number in itself, but in terms of value as well as number of shares, this is quite
significant,
large.
yeah.
So that is something again interesting to watch out for.
Yeah, I mean, escorts has been a very curious story over the past 1 month, right? People were waiting for the open offer happened. Now, of course, from a technical point of view, shares were returned. Even Jhunjhunwala, tendered his shares in the open offer, so that was also a dampener in terms of sentiment. But from a fundamental point of view, it is very difficult to justify that, so many people want to be short on the stock, given that tractor sales are expected to improve going ahead. On a month-on-month basis, we have seen improvement in escorts tractor sales. Plus, a good monsoon is expected. Agricultural prices are rising, so therefore farm income will likely increase in the second half. The same argument that I also earlier gave when it comes to FMCG companies. And therefore, fundamentally, probably the situation may not be as bad. And, probably with this much amount of bearishness on the stock, could actually become a spring coil for a larger move going ahead. So something to really keep an eye on. That said, one stock that is not going anywhere, is IEX. The company's earnings, if you look at it on a year-on-year basis, were pretty good. Strong, sturdy earnings performance in the March quarter. But there are, concerns emerging that the sequential momentum of earnings for IEX is slowing down. I mean, if you look at the past three quarters of profit growth and revenue growth, they are largely flatlined, right? And that is triggering a lot of profit booking for on IEX, given the substantial amount of money that investors have made on the stock over the past 1.5-2 years. That said, on a fundamental level as well, volumes on power exchanges are declining. According to an Economic Times story earlier today, the recent price capping that the electricity regulator has introduced is forcing a lot of the companies to not sell power in the spot exchange and instead do over the market or over the counter deals with buyers or whosoever are interested in buying more power, and that is not a good sign when it comes to turnover growth for IEX and could probably result in much more weaker earnings in the coming quarters. Lastly, the stock currently has very expensive valuation. Given the sort of run it had over the past 1.5 years, the valuations are stratospheric. At the same time, as I mentioned earlier, the earnings momentum is slowing down, and that can only mean one thing, that there is only going to be limited upside, and therefore I would not be surprised that we continue to see the sort of profit booking that we have seen on the stock today.
Also, there's been a lot of excitement around the stock. This has been one of the hot stories over the last
absolutely.
As you said, 1.5 years. So in a sense, the stock is also looking a bit overowned at this point, and if it doesn't perform well, then you could see some bit of additional selling coming in.
Thank you for agreeing with me, Santo.
Yes.
Thank you so much.
HDFC Bank, the stock has been in the limelight for over the last 1 month. Again, the concerns are pretty well known. It's going to, there will be time taken, before it can integrate the merger of HDFC into itself. At the same time, again, huge build-up of short positions, close to about 1 crore shares are short in the SLB segment. In addition, you're seeing a lot of call options being written. Now, here the assumption is that typically the call option writers in general are supposed to be the smarter ones. So there was 1400 huge activity in 1400 strike call options in April, and going forward into May, most of those positions appear to have been rolled over. So this could be one stock that could be under pressure for some time.
Yeah, and I don't see any reason why it should not be. If you look at it from at least for till 18 months till when the merger is going to complete. But yeah, I mean, if you're going to flip the position, HDFC Bank remains a quality bank. HDFC Bank remains, a leader in its sector, and probably this could be one of those opportunities wherein, given the past 3 years of underperformance and probably another 2 years of underperformance lying in front of us, maybe this could be one of those stories where, if you accumulate now, maybe it can become a multi-bagger or a wealth generator, as it has been over the past 2 decades. because let's remember, in a growing economy like India, where credit growth is expected to inch higher, we're already edging towards the 8 to 9% industry level credit growth, and that has to go as high as 14 to 15% if India has to grow at the ambitious rate of 8 to 9% going ahead. And if that is the case, then HDFC Bank should be one of the beneficiaries. That said, one stock that is not going to see short positions or downfall and probably is going to remain in investors' interest going ahead is Shanti Gears. So this is a Murugappa Group company, and another turnaround story, as I mentioned earlier with MEP Infra. This is another turnaround story wherein there are opportunities emerging for the company on the export side of the business. They are trying to ramp up their exports and also looking at maybe tying up with some of the other Murugappa group companies such as tube industry investments as well as CG Power. And the view is that if that happens, then this could bring the top line of the excuse me, of the company to a different level altogether. Now, at this point of time, the management is expecting to double its revenues and triple its profits in the next 2 to 3 years. And for me, and even from according to the point of view of HDFC Securities, this is one stock to definitely have in your portfolio over the next 6 to 12 months.
Very ambitious targets, I would say, to triple profits over the next 3 years.
Ambition is everything, Santo,
yes.
in markets.
Lastly, Mahindra Logistics. There's been a huge surge in trading volumes in the stock over the last couple of trading sessions. However, if you look at the delivery-based volumes, that have not really gone up in a big way. So, for instance, yesterday, close to 24 lakh shares were traded on the NSE, but just 5% of that resulted in actual delivery-based volumes. So, that clearly indicates that you're seeing more of a speculative action in that stock. The price has also shown some kind of recovery, close to about 7% gain in the last couple of trading sessions. However, according to Edelweiss research, while the company has been investing very heavily in its warehousing business, the improvement in margin has not been up to expectations. Also, at about 44 times forward 1 year forward price earnings, the stock is very clearly expensive. So, maybe you could see some more build up there, but whether institutional investors will buy it remains to be seen.
Yeah, but overall, if you look at Mahindra Logistics and the sector that it belongs to, the outlook remains quite strong there, given the rise in e-commerce activity that we have seen, and with the economy now recovering at a very decent tick. It is very possible that logistics sector will continue to perform well, and
there's no dispute about that. But CJ,
yeah,
again, the whole point comes down to there are business where the outlook is positive, but in this kind of a market, when overall market sentiment changes,
yeah,
how much, what is the kind of value that investors would want to assign? That then becomes a question.
It is a question of value, but sometimes it is a question of the time frame as well. Maybe
and value
today's valuation
lies in the eyes of the beholder.
Absolutely, absolutely.
Or
so
the one with the wallet.
Good one. But time frame, as I mentioned, is also very important. If you're looking at a 2 year story, then probably today's valuation may not be as expensive. But if you're looking at a 6 month story, then maybe a valuation expensive. So, as Chandler said in Friends, it's all relative. It always is
relative. Well, so CJ, what is that we have missed probably?
Santo, yesterday, of course, we looked into Campus Activewear and how the company has won praises for pricing its IPO conservatively, given the sort of market scenario. Even though it belongs to a space which is actually a growth space, which has high margins, high growth prospect. Today, I want to focus on another company which has come out with its IPO, and the story is totally different here, right? Rainbow Medicare, basically, it's a South Indian healthcare company which is known for our dominant market share in pediatric services in South India. Now, this company has come out with an IPO which is priced on par with many of its listed peers. Although there is improvement in revenue growth for the company in the first 9 months of the previous financial year, but from an analyst point of view, the valuations just do not merit that sort of a price to earnings multiple. And this is where I feel that the management as well as the investment bankers who are probably involved in the pricing process have misread the mood of the market.
Probably they could have taken a leaf out of the government's book.
Absolutely.
The largest IPO. They were perfectly willing to, they read the market conditions right and decided to trim it,
Yeah, absolutely. I mean, not only LIC, even a Campus is also a very good example of probably leaving a lot of value on the table and let the market decide what your actual value is instead of you yourself deciding what it should be. And I think that is where I think Rainbow Medicare has probably missed the trick, and you can see that in the response to the IPO so far. The issue was subscribed at the last I checked around 42%, with very muted interest from high net worth individuals as well as retail investors. So that is on the pricing side. Fundamentally also there are a little bit of issues. The company is trying to expand its bed capacity. It's going to add about 500 odd beds going ahead. Now at the same time it is also facing a lot of competition from other peers, not only unlisted but listed as well. And that tells you one thing, that margins are going to be under pressure. So when such a scenario comes and such an environment that the company is working in, at the same time to price your issue at such an expensive valuation is something that is a little off-putting, and investors are displaying that through the action.
So the earnings season continues. So which are the key earnings to keep an eye out for? CJ?
Well, it is going to be all about earnings for the foreseeable future. And tomorrow we have 4 nifty companies which are coming out with their earnings, including Maruti Suzuki, Wipro as well as IndusInd Bank. So Maruti would be probably the standout earnings, given that it's the sector leader and how it what sort of commentary it provides in terms of margins, in terms of the semiconductor crisis, as well as where the demand scenario is, not only in the urban market but also in the rural market. So that
Wipro also would be fairly interesting, given that that overall tech stocks have been underperforming ever since the earnings season started. I think investors would also be closely watching out for Wipro earnings.
Yeah, especially after the disappointment of last quarter. I think after that disappointment of last quarter, probably it will be interesting to see whether the management is able to recover some of the glory in this quarter, in March quarter, or are we or this is becoming a pattern for Wipro going ahead. Lastly, the US Q1 GDP data is going to come out later this evening, and it will be very crucial, given that it's just coming a week ahead of the the monetary policy meeting of the US Federal Reserve. What to look out for? Well, you have to look out for whether there has been a slowdown in growth momentum in the US, especially given the high inflationary environment. And if that is the case, it will probably put market into uncertain territory in terms of possible talks of stagflation again emerging, and how the Fed will react to that. Will it become even more aggressive to tame inflation, given that it's now eating into growth? Or will it go a little bit slower in order to ensure that the economy continues to grow at a robust pace? So that will be something key data point to watch out for.
Well, that's all that we have in this edition of Markets with Santo and CJ. Thank you for watching, and we'll now allow you to get back to your trading.
Yes, and catch us live tomorrow at 9 a.m. In the meantime, please post your feedback on the comment section below and follow us on the social media links at the bottom of your screen. We will catch you tomorrow morning. See you then.